what the first line of this market update, what I want to do is I'm going to actually read out these headlines. I pulled these headlines off the internet yesterday, and this is what everybody is hearing when they read the news. So Canadian home prices were down 23% in July from February peak. That's the Canadian Real Estate Association. That was on Global News. Canadian real estate prices fall another 27,000. Average sale now negative growth. That was from Better Dwelling. Canadian home sales fall for 5th month in a row, down 29% from last January. There are all these striking headlines that are, leading everybody to believe that a crash is underway. The 4th one down there, Greater Toronto detached real estate prices drop as much as $178,000 last month. That's the average price. And then the final headline that I picked out here is historic correction underway in Canada's housing market by RBC. So every one of these headlines, and this is just I went online for 2 minutes and picked these ones out. It went on and on and on. Every news outlet, every real estate board has these jarring headlines that suggest Canada is going to crash by hundreds of thousands of dollars.
Yeah.
And if you look at, the average price in Toronto or Vancouver, yeah, it has dropped by quite a bit, but it rose by so much over the past 18 months to 24 months. That, if the average price went up by 500,000 and it only comes down by 100,000, you're still ahead, unless you were that last guy to buy in the market.
Yeah, and there's always the last people, but we're not worried at all, Tim. And why are we not worried at all?
Well, this next slide, let's look at Calgary's market update. Now this, again, these stats were from yesterday. So it goes right up to August 15th, which is the middle of the month. So we can pretty much count on the next 2 weeks being about the same. Our total sales are down, yes, because that's understandable because the interest rates have gone up in the last few months. But if you look at the average price, this is the average price across the board in Calgary. It's $499. So we're still not even over that $500,000 mark, but it's gone up 2.5% in the first part of August. In July, it went up almost 1%. So we haven't seen a decrease in any month this year.
Yeah.
So those headlines that are designed to scare you, they don't apply to Alberta's market right now.
Yeah, and this has got the monthly or up-to-date stats on what's coming on the market, what's coming off. I know I was looking on our system, internal system, and today, for the last week, I think 273 properties, detached homes came on the market, and this week 279 sold. So whatever's coming on is getting chewed up, and inventory is staying where it is, and it's not helping us right now.
Yeah.
So a couple of things here. We're seeing, I was looking at the townhome market. The townhome market's gone up 10% this year. Condos behind us are finally going up. Yay, they've been soft for so long. And we're excited because next year the condo market's going to be huge, just because that inventory that's there will get soaked up.
Yep.
And then there's no real cranes in the sky. I mean, you could probably count 5 in the city, and a lot of them on the west side for some reason. No real big projects getting off the ground right now. So that means we're 2-3 years away before more inventory comes on. And so that market's going to continue to go. Where it really hurts us right now is that there's no rental properties. There's no rental properties.
Supply.
There's no supply. So we've got clients that are itching to go, and Tim and I have a criteria that we aim for 100% satisfaction for our clients. So when you work with us, we aim to make you the best or the most successful real estate investor you can be. That is our goal. And so by doing that, it all starts, Tim, with the right property. And there is no way we're going to let our clients go into certain areas or buy certain types of properties right now. We can't get into all of those, but because we're so selective, our clients have to wait.
Yeah. For instance, yesterday afternoon, we were in a property in North Haven. It's a half duplex. It was suited. The pictures looked okay. So we thought, we'll go check this one out for a client. We walked in that property and it was the biggest dump you've ever seen. Mm-hmm. So, we had to make it an educational trip, because there's no way we were going to let him buy that property. He would have been in for $60,000 worth of rentals, and that 60 would not have risen the value of that property by 60 grand. So what as I was getting into is that supply problem is a huge problem for investors right now.
Yeah, and renters, apparently, which we're going to get into. Our topic's all about it. So that is our market update. That's what's going on in Calgary. It's not going anywhere. It's not going down. We're actually thinking in September it's going to pick back up a little bit here. So
yeah, so we'll bring Danielle on right now. Danielle DeMarco is our investment mortgage specialist. She helps our clients not only buy rental properties, but she develops a rental plan for them. So they have a real estate investment plan that they can follow to acquire as much or as little real estate as they want. And we'd bring her on right now, and she'll tell us the state of the mortgage market. So if you want to come on.
Thanks, Azad, for the intro. So I have to apologize in advance. I'm suffering from a little bit of a cold here, so I apologize if I start coughing. We are fielding a lot of questions right now on fixed versus variable rates. Tim, Azad, and I just had kind of a quick conversation before tonight about it too. We all know that the US has been talking about another 0.75 to 1% increase in the prime lending rate come September. But due to inflation, there's now talks that that might drop to maybe 0.5% instead. So that leads me to fixed or variable. Fixed rates at trust companies have actually been coming down a decent amount recently in the last 2 to 3 weeks to the mid 4% range from the low to mid high 5% range. Fixed rates at the banks, though, have remained pretty stable. There's still that low to mid 5% range, and we haven't really seen them come down, and we don't really anticipate seeing them come down. So fixed or variable is really going to depend on a few factors. Are you buying a flip or a long-term hold? Are we going to be refinancing and doing the BRRRR strategy like Azad mentioned? Do you need to use the variable rate in order to qualify for the price point you want? Because the variable is lower right now, stress test is lower. So that means that we can actually spend more if we take a variable rate. So that might only be our option, our only option up front. Do we only qualify at a bank, or do we qualify at a trust company? If we qualify at a bank, we're not wanting to lock into those mid 5% range. We would take a variable, hopefully rates come down, and then you could lock in. And how long do you plan on keeping the home for? That's another question we always ask. So all of these factors are really going to come into play when we're deciding on fixed or variable for you. And there's a lot of speculation that in 18 to 24 months, we're going to see fixed rates come down again, but that is coming from a bank's perspective. So again, keeping in mind, trust companies have already dropped a decent amount, almost a whole percent, whereas banks haven't. So if we're going to see fixed rates come down in 18 to 24 months, it's likely that we're going to see those bank rates come down, and the trust company rates are probably going to remain pretty stable. So that being said, what it really means is you really need to talk to your mortgage broker when you're getting a mortgage, the intent of your property, how long you plan on holding it for. Are you okay with fluctuations in payments? Do you really want a fixed rate? Are you okay with variable, which comes with more flexible terms? All of these are really detailed questions that you need to be asked by your broker. These are going to determine if you take fixed or variable. And in a market like this, where we're seeing rates kind of bounce around from week to week, it's really important that these questions are asked so that you can make sure you're getting into the right mortgage without a huge penalty, something with some flexibility. But, you know, knowing what rates are going to do in the next 18 to 24 months, it's really important we have these conversations to make sure you're not locking yourself into a really high rate that you're going to regret. So long and short, are rates coming down? Yes, eventually. Are they going to come down to lower where they are at the trust companies right now? I'm not sure about that. Are they going to come down from banks? Yes, I think so. So that is really it for the market update right now, Tim. And we'll see in September what the Bank of Canada does and how much we increase by.
Awesome. Thanks, Danielle.